Good day, everyone. We see a situation of average that are attempting for over the last few days to digest their sharp gains. That's when the major averages were roughly 10% off their peak. Of course, in this QE environment. Hi, how am I coming in?
You're breaking up a little bit. You're in and out.
Huh. The internet's been fine.
Well, I can hear what you're saying.
So yeah, if it gets
the
bad,
market's
then,
consolidating here, going back and forth after running up sharply to new highs. You can see that. I think that's what you said.
and essentially we had markets that corrected around 2%, and then they shot straight back up, and that's the kind of behavior we've been seeing since QE3 began in January 2013. And the markets, of course, it. However, I think there is expectations of QE4 or some sort of Fed tool that will be used to keep rates low. But after QE1 and QE2 ended, the market was a bit choppy and turbulent in a sideways manner, and then finally corrected. And in the second case, QE2, the market's ran for about 2 more weeks, and then and these corrections tended to be out toward 20%. So we can't get complacent here. We got to keep on leading stock and how they're behaving. And okay, Gail's just saying I'm still breaking up, but he can hear more or less what I'm saying. So it's just saying that the market averages are showing us that right now the uptrend is intact. The sideways consolidation seems to be averages. The leading stocks seem to be lagging this behavior where leading stocks just don't seem to be all that healthy, even though the market averages start to go higher. But this time we have to keep in mind that there is no QE at this moment. And in the last 2 times, the market did end up correcting fairly substantially. So keeping an eye on the action of the leaders is very important because they kind of guide our way, as well as general price volume action of the averages. Now talking here about the possibilities of a third recession time.
You're still going in and out, Dr. Kennedy.
Okay. Possibly, and the ECB is, of course, pro QE. You know, the Bank of Japan increased their QE levels the other day and moving Houston. So it wouldn't surprise us to see the Fed step in with some.
Yeah, I think
at least a sort of announcement that this. Yeah.
Yeah, I think
I'm just about done.
Okay, go ahead.
QE4. I'm just saying. Before could is markets and we wouldn't be surprised to see that sort of thing actually on the part of the.
Sounds like you disappeared there.
No, I'm done.
Okay.
Go ahead. Yep.
Okay. Let's see.
Really
I kind of heard. I can piece together what you were saying, also based on what we've been talking about. Is you got Bank of Japan comes in, and the futures on the Nasdaq jacked 65 points out last week, and then yesterday market was looking a little soft, and then Mario Draghi of the ECB, European Central Bank, came in and said that they are committed to acting, whatever that means. And I guess what it means essentially is printing more money if necessary. But it's really not solving the real problem. So we'll see what the market does here. But you're consolidating these sharp gains. I would be surprised if you pulled in to fill the gap at least. And I'm just kind of watching individual stocks because I think there are things that you can be short and be long at the same time. I don't really see this. I'm not really looking at this as a bullish or bearish market one way or the other. I try not to get locked into that sort of thing. Anyways, the QE discussion is what it is, and I think you just got to watch and see what the stocks are doing. Stuff I'm watching today, actually, I'm short Twitter. I think this is a little bear flag, and it stops in here on top of this thing. I think it's headed for this low, so if you can work yourself into a short along this downward trend line, I think it has a good shot at going lower. I also think Facebook is showing us a bear flag, so you get this wedging rally. You already saw it reverse twice at the 50-day. Well, actually, that's a gap down, and then it tries a rally intraday, and it gets resistance at the 50-day. And then here again, we see resistance at the 50-day. I think it's probably headed for this low, undercutting this low, which is 70.32, and somewhere between there and the 200-day moving average. So everybody can hear me okay, right? So it might just be you're having that issue again with your internet, Dr. K. It might just be that same thing, just kind of surfacing
I know,
again.
they said they...
There you go. What's happening is you'll fade out, and I hear static. That's what happens. I hear you now. I hear you typing.
They said they made adjustments, but I'm okay.
Well, okay. Well, we'll just kind of we'll deal with it as we have.
It's this big company took over a small one, and the big company is dropping the ball.
Yeah. What else is new? That happens a lot, actually. And someone says, when will Dr. K get off his dial-up connection? Hey, that's all I have in Britain or in London. Let's see. Getting back, let's see, where was it? So Facebook, I think this is a gap down, and this is a late-stage base failure, okay? So all you know is that it's failed. I don't know. Maybe it turns around and breaks out again and goes higher. I don't know. But what I see now is a stock that finally is broken down on the breakout attempt, your V-shaped breakout attempt, gaps down on earnings on heavy volume, and now you're just wedging up into the moving averages. Here you got the 10-day crossing below the 20, which is crossing below the 50. And to me, this is just a bear flag. And so I'm going to treat it like that. So I'll short into rallies. It's up a little bit today. Let's see what it looks like on the 620. I'm already short a position in fake book. But this is what it looks like right now. So it's kind of it had a MACD stretch earlier. Now you're getting a MACD stretch. And so my guess is it's going to roll over. So it's just a matter of having a position in here. Best to put it out, if you can, as close to the moving averages as possible. But I think if you're anywhere around between here and, say, 77, I think the moving average is only 76.66, which isn't that far from here. Less than 1.5%, I think. And so, that's how I look at it. Twitter, again, like I said, another bear flag. And what I think is interesting here is that you watch the stock trade, and I watch these things, intraday. That's basically how I operate, because people ask me, well, how did you know this is going to do that, or how do you figure this out? It's just watching it. I don't know. I've been doing this for 25 years now, as has Dr. K, and I think after a while you can just see stuff happening in front of your eyes, and if you're open to it, I think you will hear what the market's telling you. And I really think for traders, as you get more and more experience, that's really where you're headed. To me, Bill O'Neill was amazing in that he was able to feel things. A lot of times he felt when to act, and he would act decisively. And I think a lot of that is hard to explain to people. You just kind of develop it over time. Anyways, but I think this is probably headed lower, and it would make sense, just in the same way that if you look at Solar City, when it came down, it comes all the way down to the top here, and it's stutters back and forth, stutter steps a little bit back and forth, and then it breaks lower and undercuts the lows. So I would look for something like that in Twitter. So I'm short the stock. I've been working it on the pretty much every day. Sometimes holding a little bit overnight, but for the most part, I don't hold stocks long or short overnight in size. I just don't trust them, especially in earnings, because otherwise you end up holding something like this. And I hope none of you are holding this. I hope everyone saw that this violated the 50-day moving average a while ago. So I don't want to hear that anybody is still holding it any more than I want to hear that anybody's still holding this. Being this is pretty typical. Stock runs up, looks great. There's this one. What was that other one? Green Plains? Yeah, and these were doing great, and all of a sudden they just blow apart. And if you're stubborn and you don't cash it in, you know, I tend to operate on the basis of the axiom that, which comes from the great Gordon Gekko of the original Wall Street movie, that a fool and his money are lucky enough to get together in the first place. Okay, that's how I look at it. And so when I'm making money in the market, I'm basically playing strong defense and keeping tight stops on things and not letting things get out of control. So that, you know, that means selling into moves like we saw some real nice moves on Rewalk off of here, and you're getting 20% off through the 10-day here. Same thing with Cyber and some other names, and I'll take that. And you know, now you see why. You look at some breakouts here. Here's one. Acorn was real hot and everybody was into it, and now it's just kind of blown apart. So you know, what else is new? This typical QE market. Breakouts don't work, so be careful. You see this? There's a breakout. See if that works. Still coming up off the bottom. Wouldn't you say that's straight up off the bottom, Dr. K?
Yeah, absolutely.
Yeah, and so if it's failure prone, you know. So anyways, you guys can hit me with questions as you want to. I think LinkedIn also is probably a short. Here's a gap up move, and then it broke out, and of course IBD is telling you all about it right here, somewhere in here, probably here. Give them a little better credit than that. It went up for another day. But my thinking was, if you want to play this as viable gap up, why not? You know, and I actually did, and stock ran up a good 10% from the 200 level when it turned positive after hours, which is when I was first looking at it. And so you got that profit, and 20-30% very quickly you take it, you know. Somebody's asking about First Solar. You know, I was trying to short that yesterday. After hours, it was like bidding 55, 56 right off the bat, and I just couldn't get it to hit. And every time I'd go in there, it dropped further, and this thing's gapping down. So this looks pretty ugly. You're undercutting that low. So to me, that implies a potential rally from here, and you're getting that intraday just a little bit off the lows. But I think, you know, what you got here is an improper double bottom. It tries to break out, it fails. So the real short point was probably up in here. And if you guys remember, I was talking about this back when we were first looking at Solar City, that the solars are weak, and you had already had First Solar. So this is when Solar City was starting to break down on the late stage breakout fail, and we talked about it right here, right at this level, which is around 68, 67, 69, I guess. And at the same time, First Solar is looking like this. So what it's trying to do is break out, and it's rolling over, and confirms a weakness in the group. So now it's way down there. Okay, so you want to short it now. Arguably, you might be late to the party. So see Tesla. I still think Tesla's a short. What's really interesting, I was watching CNBC yesterday afternoon and actually this morning, and watching this 25-year anniversary special they're having. And I noticed they're getting these guys, like the guy who runs Barron Funds or Barron Investments, I guess. He's over there talking about how Tesla is a great long-term investment. And I thought that was very interesting, because where were these people back in May of last year? All of a sudden now Tesla, which was, you know, arguably overvalued, at least everybody would argue that it was overvalued, blah, blah, blah. And now it's a long-term investment because they're going to dominate the electric car industry. I think you don't know for sure, and all you can do is go with the technical setup. So what we already know here is you have a fractal head and shoulders, and you can draw a neckline along these lows. Now, you'll notice drawing necklines is not an exact science, so I just want to make that clear. Because you can you get these fuzzy areas. You know, do you connect these two lows? You connect these lows. You know, what I do is if I get an area like this, it's real sloppy. I try to just kind of find a midpoint, and it's a rough neckline. There's nothing precise about it. And sorry to all you people who need things that are really precise, but all it's doing is rallying into the neckline. I thought yesterday's action was very interesting. Huge volume. I don't know who's buying it off the lows, but in the morning pre-open they're slamming it, and I had shorted it after hours, up as high as around 244 or so on, when was that, Wednesday, I guess? Wednesday. Yeah, they came out with earnings at Wednesday after close, right, Dr. K? Yeah, that's right.
Yeah.
Okay, and so I hit it, and then they're killing it on at the open, and it reverses briefly, and it pushes down to the 200-day moving average, and I actually got a 620 sell signal, or buy signal rather, off the lows on that, so it covered part of the position. But I've been holding a core in here that I put out after earnings, and still sitting at stock. The stock is now what, 238.16. I think it's printing the lows of the day right now. Well, close, and it's right at the 10-day. I think it's heading for the. I think it's heading lower. So I mean, I don't know exactly where it's headed to. Maybe the first point of reference would be the 200-day, or maybe this low, which is 213.60, or maybe ultimately this low. But it looks to me like it's headed lower. So notice Facebook is still rallying. Popular place for money now. Some people asking about Rewalk looks okay, but for general market, well, your thoughts? There's nothing really to think here. The stock's sitting along the 20-day moving average. Volume is drying up, but they come out with earnings next week. So if you feel lucky, you can try and play earnings roulette. Good luck with that. I don't really care to do it. I have no idea what's going to happen here. If there's some sort of a gap up move, you might have a viable gap up. That's a possibility. Loco came out with earnings yesterday. It had a pocket pivot, but now it's trading down just a little bit. And yeah, nothing happening there. Not blowing up. At least it's not doing what Salix is doing. But I don't want to touch Loco right here. I don't. It's got to act positively. I like being short Tesla and Twitter and even Facebook. I'd be using this rally up to the 50-day to just build a short position. I have a small one right now, but I've been holding that for a little bit, a couple days at least, and we'll see what happens. Maybe may add to it actually, just watching it. Data. Okay, we talked about these over the weekend. I was talking about some of these stocks, how they were forming head and shoulders formations, and if we go back, and I talked about this last week too, but we sent out a piece over the weekend. Yelp, had formed a head and shoulders, and as it's rallying here, this is rallying above the left shoulder. I don't really pay so much attention to this stuff anymore. I know that in the old book, the old short selling book, O'Neill, his thing was that, the right shoulder has to form below the left shoulder. And if you call this a shoulder, it's close enough for, hand grenades and hydrogen bombs. And so, it stalls here, wedging rally up here, and then starts to break down. And, of course, here's your big short point into earnings if you were brave enough to hit it. I actually did hold some short into earnings. That was a very rare thing for me to do. Market's still kind of sloppy here. Tesla heading lower. Twitter heading lower. Facebook rallying right now. Let's see. Take a look here. Yeah, so you're getting, that's what it looks like on the weekly chart. So really, now you're just living under the 10-week line. You can see that. And it's somewhat late stage. And everybody loves Facebook. Remember, everybody hated it down here when it was in the 20s. Now everybody loves it, of course, and it's a stock that you can just own forever. Now I think the stock that you can own forever is Baba. And I think as I tweeted on this day, this was a IPO U-turn breakout, and you might, I don't know, is that close enough for a pocket pivot, Dr. K?
Yeah, I think so. That's all right.
Market's turning now. Choppy and sloppy. And that's, yeah, it is a beast. So I think if you get, this is one of those stocks where it reminds me of
Google back in 2004.
Yeah, and I remember back then I just had Google and Apple. I bought those two stocks, and that was all I needed. And we were off to the races. And so I think if you want to be long this market, Baba is like your is like an ETF.
Alibaba.
Yeah. So anyways, let's go. Getting back to this noise, data is, I don't know, it's gapped up. That looks a little suspicious to me. So I wouldn't really, I wouldn't be buying into this. I'd be watching to see how it plays out. It could become shortable, but you have to see some sort of failure. Another one that looks like that is Splunk, and they haven't come out with earnings yet, but you can see this thing's trying to rally, and it's up on light volume right now. I'm actually looking at this, let's take a look at it's running up right now. It might be getting to a point where it can be shorted. Using a tight stop, of course. But market's pretty choppy and sloppy here, which I think probably makes sense given given the position of the indexes. But a lot of stocks, I would say, Dr. K, do you see even action among leaders? I think the leaders are kind of spotty. It strikes me as pretty spotty action overall.
Yeah. They're lagging.
Yeah, and
you know, there's a couple that are, well.
Where's, let's see, I want to look at, Russell 2000 is hanging in there. So, I mean, it's trying to hang in there, but I still think you're going to be pulling back or slopping around for a while, and I don't think you need to be chasing anything. Just wait for your shots. Let's see. What other stocks? Oh, Workday's another one that looks kind of like, whoop, no. Over here we go. This is another one that looks like this, you know, right shoulder. So you're watching these. I would watch for some sort of failure in here as a signal to get short. So market looks like it's going to get hammered, then it finds its feet. But where do you go in terms of individual stocks outside of BABA, of course? Cyber, they're coming out with earnings next week. I think, you know, we were looking at this. The run-up here, you had to be buying in here, and then the run-up to new highs on the breakout you sell into. If you're buying that, I think you're kind of a panda, as we like to say in the chat room, but you pulled back right to the top here. You know, maybe it's viable here going into earnings. Like I said, if you feel lucky, you can do this with the stock and buy a little into earnings and see if it holds. But we saw FireEye get ripped apart after earnings, but that was another one that we talked about over the weekend. Here's a big head and shoulders, and it's just following this downward trend channel, and there was resistance right at the peak, and that was pretty much it right there. So, you know, that's probably put the fear of God into investors who are in these smaller security names. So Palo Alto Networks also looks a little sketchy in here. You see a lot of heavier volume selling. Dr. K, what's your take on this one? If you owned it, would you just sit with it right now?
Well, you know, the market's doing pretty well here, and you know, everything's always contextual. So keep in mind that in strong uptrending markets, not this one because we don't have leading stocks accompanying it, but in good markets, you don't want to be sitting on a stock that's going sideways. You want to dump it for something that's going to be a faster racehorse. In this kind of market, yeah, you can sit on it. You know, it did have that gap down. That's a flaw in the pattern, but right now it's not doing anything particularly wrong. If I had a position in this, I would probably be sitting on it and just watching carefully.
How about
the idea is always be in the fastest names possible. What's that?
Would you buy it going into earnings?
I never buy anything. Well, generally, if I did, it would be the position size would be reflecting that, knowing that the stock could have a nasty gap down.
Right.
But you know, as far as earnings, there sometimes are clues given leading up to earnings, but in these QE environments, it's that gets a little bit distorted. It's not quite as precise as it used to be. So I would just err on the side of caution and make sure my position size is ready for, say, a 30% drubbing if earnings came in soft.
30%. Holy cow. Okay.
Yeah, or more. I mean, we just saw that other stock get nailed. What? If it's a biotech, by the way, if you're holding a biotech into earnings, be very, very careful because those biotechs can lose more than 50% overnight.
Yeah. What is that move, anyways, on the day? Minus 37%. Ouch. Ouchie. Anyways, let's go through some more names and try to run through these now. I think Now had a pocket pivot yesterday off the 10-day line right there. I think so. 1, 2, 3, 4, 5. Wait a minute. Let's see. 1, 2, 3, 4. Yeah, it did. Yeah, it had a pocket pivot off the 10-day. It already had a breakout. So it's this long cup with handle sort of thing that's coming out of. It looks a little, I don't know, maybe it does look a little nesty to me, but we'll see how this thing works. So far, I think if it just holds above 65, you're okay. Let's see here. TriNet, that stock is squirrely. It's, I think you bought it at the 20-day. There's a pocket pivot here, so, that worked briefly. And then ran up to new highs. Again, there's your breakout, and it comes in. But look at this after earnings 3 days ago. This thing's all over the place. So don't ask me what's up with that. Let's see. Illumina. I don't know. This is an older name. It's coming back to the top of the base. I don't know. If you want to buy it, go ahead. What is this one? QLIS. Okay. Qualsys. I don't know what we're supposed to tell you there. It's way extended, so I don't even know why you're asking about that. Unless you want us to tell you to sell it. I think Taser at the 10-day might be something to look at. That looks okay. I mean, you run up straight up from the lows to new highs. Again, you see the breakout. But coming into the 10-day, I try to buy it as close to the 10-day as possible. So I would not be being a hero trying to buy it up. So just try to be opportunistic. I think a lot of these names, you have to watch them as they come into moving averages, because that is where you have your best shot at taking a position and buying into weakness. So that would be my approach. Zeltique. It's better not be another stock that's way up there. It's breaking out, breaking out of a cup base. I don't know. There's no buy point here. How does Monster look to you if you owned it? Very happy if I owned it, but I don't own it, so I think I won't worry about it. It's extended. Is that a viable gap up, Dr. K?
Yeah, I would call it that would qualify.
Okay, so you can
It had
buy
a
it using...
viable. Well, it had a prior gap up the last time it had earnings, and then it had a piece
it kind of came in. I don't know. You could go after this if you want. Maybe there's some stuff going on with Coca-Cola, some buyout rumor stuff. I don't know. Somebody says no position size is small enough for a 30% hit. I agree. That's why I don't really hold stuff into earnings for the most part. G-Pro. This thing is all over the place. I don't know what to say here, because I think if you're going to buy it, I was actually tweeting about this after hours on the earnings gap up move through the 50-day. But if you're going to buy it, the shakeout plus 5 I would use would give you 73.34. So you could have bought it after hours right around there if you wanted to jump in on this thing, and I thought that was a place to buy it. Or you could buy it right at the 20-day the next day, or in here on the pullback. And then this move to 80 through 85 through the midpoint here is it's not a double bottom breakout, but to me, I own the stock. I sold it there. I bought it coming up through here, and I sold it. You get a nice 10-15% move in a day or two, and I'm gone. Thank you very much. And I just cruise out, and take my profit. Like I said, I operate according to the axiom that, in this market especially, that a fool and his money are lucky enough to get together in the first place. So, let's see. If you owned, would you stay with QLY? I don't know. Who knows? I mean, the problem is you want someone else to make your investment decisions for you, and that's not what we do. And I think that's really silly. Yes, I'd sell it and take the profit. If I had a 15-20% profit myself, speaking for myself, yeah, I would take the profit. But I think that's pretty well known that that's how I operate in this market. So, that doesn't mean that it isn't going to go higher. But I don't care. I'm up, pushing. Yeah, I'm afraid to even say it because I'll jinx myself. But I'm, pushing close to triple digits, and I have done that all year long. Just take my profits when I have them. And 15, 20, if I get 25, 30, like I did recently with RWLK, because I bought this thing right around here, around 25 and change, and it ran up to 32, and that's like almost 30%. instantly, you got to take it. You know, if you don't, you're a fool. So, you know, but if that helps you figure out what you want to do here, you know, that's great. But, you know, I can't tell you with any certainty what is going to happen. If, like I said, if I had a 15-20% profit, I might take it. Radian Group is just bouncing off the 10-day, no pocket pivot. It's extended. Trying to come out of this long base, see if it does. But to me, it looks like a slow stock. Doesn't that look like a slow one to you, Dr. K?
Yeah, RDN, not particularly exciting.
It's a snore. Tube, the best, one of the best symbols in the market, but you can see it forms a flag along the lows. You dry up, so you could have bought it, I guess, and you'd be up a buck here today. So it's acting okay. This comes out with earnings next week. I thought it was buyable here, and then you can sell into this move and then think about buying it, but I haven't messed with it since. Somebody says, don't even answer these what if you own stock questions. You're very kind to field this nonsense. Well, thank you. Let's see. Wow, look at Baba, 114. That's where all the money is going to go. It's going to hide in Baba. Alexion, Bible gap up here, holding along the 10-day. Let's see. I guess this would be a continuation pocket pivot if you really need to buy more of it. MBLY, earnings come out next week, I think. But this, to me, I think I pointed this out last week. It looks like a fractal head and shoulders. You know, on the weekly chart, it looks there's a head and shoulders type formation. The break down the right side, this is like a, I don't know, a skinny man, a stick man head and shoulders. You know, he's got a pin head and pin shoulders there, and I think this thing is probably headed lower. I don't know. I don't like the way it looks. It's just not looking good. Maybe it's, you know, coming in on light volume. Maybe it's the earnings that spark it to the upside, but I don't know. I'm not really willing to mess with this.
Yeah, and you have that downside negative price action.
Right.
You know, this gap down, and you know it's kind of a feeble rally up to the midpoint. Now it's heading lower, and that's pretty textbook.
Service Master, I don't know. It's a V-shaped rally back to the highs. You know, I don't know. Did these guys did they go private and then come public again? I don't know. Anyways,
I don't know.
let's see.
I don't think so.
Okay. Service Master. It sounds.
Yeah, they just had their IPO and through J.P. Morgan. I don't know if they were in some weird, you know, different. Don't remember the name. So
I'd watch this rally back. I think they're just sucking people in. So watch your 620s on the short side. I did cover my Twitter already while we were down around 40.90, just short term. Let's see if I can show you what I'm looking at. You can see on the, you make a low here, you undercut. You get a MACD stretch here, and you've already, and now you're turning on the second undercut of the low. You can see the MACD is actually positive. So that kind of thing, you know, I got a profit in this. I'll take it, and I can always come back and re-short it. So I actually got a notice from my broker that I have to file with the SEC, and I don't know if any of you have ever had this, but based on the size of my trading, I have to file with the SEC as a large trader. I thought that was hilarious. And then I guess they give you a number, so then they can track what you're doing. Why? I don't know, but it's just Big Brother doing their thing, I suppose. But I thought that was pretty funny. But I'm pretty active, and I generate a lot of dollar volume up probably. Whatever. But I'm not doing anything wrong. But, of course, you know, if you're doing anything in this economy, I guess, or in this country, the government's going to track you whether you want them to or not. So, anyways, whatever. Let's see, Cubis, I don't like this. Piece of garbage. Why would I buy this? Nah, I'm not into it. PCYC. It's broken out. It's V-shaped breakout. Do they come out with earnings, Dr. K, soon? Do you know?
PCYC. It says September 15th. I thought no, sorry. No, they're coming out, they just came out, so not for 3 months.
Not really doing anything. Sell it, take your profit and run. Okay, let's see, SMC, Synchronos. Is that right? Yes. It's just holding on the 10-day after this pocket pivot move here, so looks okay. Wouldn't really get too worried about it either way unless it Let's see. Dr. K, can you discuss your take on the precious metals? I got to do something here real quick. I'll be back in 20 seconds.
Yeah, hopefully everyone can hear me. This GLD and SLV have been in downtrends, as you can see. They've been plumbing new multi-year lows, and what we're seeing, actually, yeah, with GLD, it's just it's trading at 110 and change, and its critical low was about 114 and change. So there's nothing going on here. Commodities overall have been in downtrends as well. So it just speaks to the lack of global demand for commodities at this juncture. We're not too surprised because Europe has been talking about having a third recession since it'll be the third recession since 2009. Not that it will, but it's talking about it, and things are very soft over in Europe. The UK is not much better, and we're seeing these central banks speed up their QE programs. So it's very treacherous in terms of the global economy, and whether QE can rescue it or not remains to be seen. So far, not so good. We're not seeing real strong evidence of economies turning the corner. And so we see this continued downtrend in commodities and precious metals as a result of this.
So nothing really to do with any of these, really. Okay, let's go to some other questions. Somebody says, large trader can also be defined by the trader's weight. Not really as far as the SEC is concerned. So, anyways. And I guess in that regard, size or height or weight, I don't think I'd qualify either way. So, anyways. Any more awesome questions? Come on, you guys. I want some brilliant questions. I was going to talk about, let's look at Google. And I was going to talk about how this, what this did back in 2004. This is what I love about HGSI. You can do this. Here's the IPO U-turn. And you can see it broke out, and I guess it ran up about 10, 12% from there. And then it went sideways. My view is it's kind of doing this right now. And then you came off the 10-day moving average here. Let's blow this up. You came off the 10-day moving average here since you closed at it right here. You came off the line here on a pocket pivot, a continuation pocket pivot, and then you were off to the races from there. And I think there's probably, let's see, this is a gap up move. I don't know if that's a pocket pivot. This is a pocket pivot here. So you've got several of these that you could have been working on this when it first came out. I remember buying it. I showed it to Bill O'Neill right in here, and he was, blah, 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 what is an IPO U-turn? And I explained it to him as a high tight flag. So this thing came public. I guess it went, what did they do, 10 for 1 split, Dr. K?
Back then?
Yeah. No, well, since then, because now the price is, so this would have been, actually this was around, so 2 for 1 maybe. Yeah, because this would have been around 110, 111 when it broke out, and that's about right here. So, but I remember I explained it to him as a high tide flag, and then he's like, oh, okay, that's good, we'll put it on our buy list, and you had to wait 2 days to buy anything on our buy list. And so you wanted to get it on the buy list if you're an internal portfolio manager. So, but we had to put it out as an alert to the institutional clients first. So, but that was the IPO U-turn. And you can see, so what we got now, BABA's a little steeper. Well, actually not. The cup is actually not as deep. It looks steeper here on this run up to new highs, but I can probably make it look steeper like that. How's that? And so you've broken out and you've run up about 10, 12%. Now I'd be looking for this to pull back. So if you don't own it, I sold into this move, so I don't own it right now. But if you don't own it, don't start chasing it. You'll get a chance to buy it. So just relax and wait. Anticipate. Do not chase. Google's 23 billion market cap at IPO. Bob is 280 billion currently. No, it doesn't bother me. Why does it? Why do people start getting into all this anal retentive overthink? I know someone in the chat room also the other day. I was reading the chat log, and I think as the stock was around 104, 105, they're talking about some article in USA Today talking about how they have some weird structures. Like everybody knows about that. Any institutional investor who's buying this stock knows about that. And that, since when do you start basing your investment decisions on what USA Today writes? I mean, I just thought that was incredibly silly. And Baba's market, who cares? The argument against Facebook when it was 35 is that its market cap was too big, and the stock has more than doubled from there. So I wouldn't get all wrapped up in that sort of stuff. I would get wrapped up in the technical action. So that's pretty much what drives my thinking, and I don't really get hung up on market caps or this or that. If money is flowing into a stock and institutions need to move money into stocks in a hurry, they're going to go for the biggest, best things they can find. I think right now Alibaba is one of their favorites. Excuse me. RWLK surging. Let's get this out of the way. RWLK surging? I guess if that qualifies as a surge, it is moving on an intraday basis probably. Let's take a look at the 620 chart here. You can see now also on Twitter, I'll go back to it. You have a buy signal in here on RWLK, but I wouldn't mess with it. I really wouldn't be looking to get aggressively long here right now. I think you'll have a shot at being opportunistic on the downside, and things will come in for you. So just hang loose. Don't chase anything. Don't try to play earnings roulette unless for some reason you're really confident, or you're like me, you're up close to 100% for the year, and if you get hit for 10%, who cares, right? But the way I look at it, and as I already said earlier, we operate according to the axiom that a fool and his money are lucky enough to get together in the first place. Market, I think that holds even more true. So why are leaders like ANET and SWKS blowing up on great earning? Well, I can't answer that question. Apparently, they have great earnings reports and they're blowing up. That's a sort of a blow up. But again, this thing comes straight up off the bottom, and so give me an excuse to take profits, and I'll do it. And that's probably what's going on with a bunch of people who own it. The other one is ANET. And the reason the earnings reports might be great, but the market's forward-looking, not backward-looking. So it doesn't matter what, that's just an excuse to unload it, I guess. And so there's no reason or no need to understand why, unless you're dumb enough to sit with the stocks into earnings. I think if you were lucky enough to buy it off of this low here, which this kind of looked like an ugly duckling thing sitting on top of this base and coming into it a little bit and holding along these lows, I guess, in the 71, 72 level. If you traded this up and you didn't sell into that, I think you're an idiot. So pardon my frankness. Late to the call, did you look at SWR, Sierra Wireless? No. But that was a pocket pivot or a Bible gap up yesterday. Now it's coming in. It's a breakout. Beware the breakouts. Someone in chat was also pimping Fizzler. I think, no, they were pimping Solar City. Somebody said that, when Solar City was here that, oh, this is a great stock, I don't know, it looked like a short going into the 50-day, and it was, and it broke down. So there you go. You had to be on it there. But SWR, let's go to SWR again. Bible gap up, breakout, flag breakout, take it from there. CDW, it's gapping up, but this is not the sort of thing I would be buying into. I do not like to buy into stuff like this. A lot of momentum. It's already come up off the lows. I'd rather be trying to buy it either coming off the lows or somewhere setting up along a moving average on the way up, not coming into it late. So, but I also think the problem with what IBD teaches everybody is they want you to react to strength. And so you see something acting strongly, and you've got to go jump all over it because it's acting strong. And of course, that gets your greed. That hits your greed button a few hundred times, and so you're going off that way. And that's really what the basis is. You see something like this, oh my God, I got to get in this now. Anticipate. Be more anticipatory. Be more opportunistic. That's what works in this market. Chasing strength does not. End of story. Let's see. Talk about a gap up. Look at WFM. Whole Foods. Yeah, UBS was out. I got a call from my buddy over at UBS, and he was telling me, asking me here, what do you think of WFM as a short? Because I guess UBS was recommending it as a short. Take a look at that, Dr. K. I thought, I don't know, if UBS is recommending it as a short, it probably isn't. And it wasn't. The thing took off. Look at that. That thing's rocking after earnings.
Surprise, surprise.
Yeah, but let's go through some more of these. Someone's asking about Shire. I'm not, as a short, I'm assuming. Yeah, this could be shorted here, I guess. You use the 200-day as your stop. That's a massive breakdown, gap down. So you would look at this as probably a left shoulder. Maybe this is your left shoulder. Here's your big head. Now this is forming a right shoulder. It trades, how much does it trade a day? Yeah, that fits. That looks pretty good. You can short it if you can borrow it. And then use the high of the day or the 200-day moving average at 199.55 as your stop. But yeah, now see, this person is anticipating. And yeah, someone else would be asking me on this day here, do I short SPGY or SHPG? But didn't it used to be SHPGY or something like that? Now it's SH.
That's right.
Yeah. But this is what you're looking for. Big volume, huge volume. Not just big, I mean that's massive volume gap down, and then it rallies up into the 200-day moving average, and now it's rolling over. That's where you hit them. Another one to look at like this is CMG, because I think this thing's, you had the late stage breakdown, and I think that, let's take a look at this on the 620. I've been watching this one. Oh my God, look at that. Oh, that's so beautiful. I'm going to short a little bit here and see what happens. But what you're seeing here is it may be rolling over, so give it a shot right there. But that looks about right. And that's hanging along the 65-day exponential, which seems to have served as resistance. But I find, and we talk about this a lot in the new book, which incidentally is in production now. So but the 20-day moving average is a moving average that seems to be pretty reliable once something starts breaking down in earnest, and so you can use that. And so, it's hovering around the 20-day, and as I tell you all the time, I don't look at moving averages as solid lines, but sort of fuzzy zones. There's a little more, I use quantum moving averages. Is that right, Dr. K? Is that what I'm talking about?
That's correct.
Quantum moving averages, okay. That's, in fact, we should...
Binary moving averages, 1 or 0.
We should pioneer work in quantum moving averages, I'm reading a new book right now titled Biocentrism. I think everyone should read this book. It's hilarious in terms of implications. I don't mean hilarious in the fact that it's nonsensical. It makes a lot of sense, but there's a lot of stuff I thought of in the past, in terms of relativity theory and string theory and all these new theories of the universe and what it all is really about. Anyways, I don't know why. Oh, and they actually. That
sounds interesting. Actually, I have not read that book. And what you just said kind of triggered something. So I'm going to check into it actually.
Right. Well, one of the premises is that the quantum mechanics is a manifestation of consciousness in the universe. So
right,
and how it.
Yeah, and I've looked into that in some detail because I'm very intrigued by bridging science and spirituality, and there are some physicists in the States with good reputation that are actually starting to work on that bridge for the first time.
You should read this book, then. It's fascinating.
Yeah, it's the one by Robert Lanza.
That's a good question. So.
It was published it was 2010.
I'm trying to remember. Let me pull it up here. I got it on my iPad.
But it's not a brand new book, right? It
is relatively new. But let me just let me pull it up here.
The Holographic Universe, which we both read, is also favored by those who read Biocentrism.
Yeah, it's Biocentrism: How Life and Consciousness Are the Keys to Understanding the Universe.
Yeah, that's the one.
That is so cosmic. It makes me want to smoke a bunch of weed and just get it. Yes, right, Robert Lanza. You're right. So, anyways, Maybe take some peyote.
Sounds pretty interesting.
Yeah, and then read it. But in any case, yeah, I think it's pretty fascinating. But anyways, so you guys should all read it. Let's see. How do you find leading lists of stocks? I mean, how else? We run screens, you know. I basically look
Lots
at.
of screens.
I'll tell you what I look
Lots of
at.
screens throughout the day when the market's in a very good uptrend, and we haven't really had one of those markets in a while. But you're gonna be. I mean, I would run my screens probably 5 or 6 times a day when the window of opportunity is open, because I don't want to miss anything. I want to be completely glued. But we haven't had those kinds of environments in quite some time. So, you know, the screening wheel isn't turning as fast as it used to.
No. I like the list on HGS Investor Software that comes out every day. It's stocks and groups moving to the upside. I look at that list every day. A lot of the stocks that I buy come from that list. Another list I'll look at is I just run a very simple screen. I look at all stocks with a composite rating, a Neal composite rating, which is an IBD of over 85. I look at all IPOs within the last year and a half to 2 years that have a composite rating over 70. Sometimes those lag a little bit, and the stock will be moving before that composite rating gets, you know, over 80 or 85, where you would consider it to be, you know, the right level. But I don't really worry about that. But that's basically all we look at, you know. And I just look at anything, you know, even on my Schwab platform, which I use to trade my Schwab trading account. It has some screens like gap up, stay up is one, and volume fee. I mean, there's all kinds of stuff to look at, and then you can break it down from there. But it requires work and effort, you know. There's no magic list of magic stocks that you just buy and they go up. Dr. Robert Lanza, the doctor from ACTC, somebody says, what is ACTC? Almost sounds like a rock band, but Advanced Cell Technology. Maybe he's involved with that. I don't know. But, you know, science, this sort of stuff, biotechs and whatnot, don't really have any bearing on one's...
Yeah, that's right. That is the guy. And apparently he was taken under the wing of scientific giants such as Skinner, the immunologist Jonas Salk, and the hand transplant pioneer Christian Barnard. So this guy's quite a heavyweight. I'm just looking at his bio right now. Very impressive. I love it when a guy with this kind of track record is stepping into the realm of what a lot of people would call crackpot science or pseudoscience.
Yeah, definitely. It's fascinating, I think. Anyways, that's kind of has nothing to do with investing, but a little, you know, sideline. How we love to enrich our webinar members. Let's see, what's the name of the book again? It's called Biocentrism. Heck, what did I say? Biocentrism: How Life and Consciousness Are the Keys to Understanding the Universe by Robert Lanza, Lanza. Sounds like a sports car. I'm going to drive off in my new Lanza, my electric Lanza. My fusion-powered Lanza. Okay, somebody says, I need Gil's magic chart. You do. If I could package it, I would. But there was a period of time where my chart was not so good, but we're back, you know. We are back, and we are badder than ever before. So, Bluebird's a garbage stock. I don't know. Whoops, there's a 620. It's in a flag trying to break out. Buy it. It's a biotech. Maybe it'll blow up 50% tomorrow. Let's see. Somebody says, that's too deep for us pandas. No, it's not. It's deep, just deep enough. ACTC stem cell company trying to cure macular degeneration. Yeah, I remember Harry Wayne, who hired Bill O'Neill back in the 50s, and he was a good friend of mine. He died when he was 90-something, but I remember he had macular degeneration, and when he died, he called me up a week or so ahead of time and told me that he was going to die and wanted to say goodbye, which I thought was pretty cool. But one of the things that was really bumming him out was macular degeneration and losing his sight. In addition to becoming incontinent, I think he didn't really like that. Because I remember him calling him, he says, growing old sucks, so I just want to let you know I'm out of here and I'm done. So that was kind of nice to be able to say goodbye to Harry, and he was actually responsible for me meeting Bill O'Neill and getting to where I was. So anyways, he had macular degeneration. It would have been nice if there was a cure. Maybe he would have stuck around, because he was still pretty vibrant for a 93-year-old guy. Anyways, anything else? Let's see. Grub-a-dub-dub. I'm just going to go through some names I've been watching. I thought this might hold in here, and look at this thing. It's ugly. Ugly. Ugly, ugly, ugly. Let's see. Mobileye we talked about. Rewalk we talked about. Now, how about Hawk? I actually, this whole group, this is the credit card finance group. There's another one, GDOT, but this one had a gap up. And I don't know what's going on here, but I think you got that is the leader, and that's, in that group, and these were probably the ones to buy because they've moved higher. We did pick up those moves when they occurred. And market's just kind of flat here. I'm watching this Splunk here. It's just hanging around. Let's look at this. I wouldn't be chasing this rewalk. I'm not doing anything with it. I made my 25-30% on that thing, and I'm just going to hang out. You can do it at once after earnings. Splunk still moving higher. You get a cross here on the MACD. Might be getting to a point where you short it, but I don't know. For the other side of the coin here might be that you really want to be buying it. I don't know. But it's sort of weak volume. What's it running today? Let's see. Minus 21% right now. Just give it some time. It's probably going to roll if the market rolls. Meanwhile, Tesla pressing the lows, 238.07. Let's see. When is your book coming out? Sometime next year. There was a car called a Lancia Beta. I think it was introduced. Aha, that's what I'm thinking about. But I'm not. This isn't the Lancia. It's Alonzo. We're gonna do. Speaking of smoking weed, was Cheech and Chong an accurate representation of the Southern California lifestyle? Not really. It's hardly any kind of an accurate representation of anything, any kind of lifestyle other than a massive drug-addled stoner's lifestyle. So I think it was more representative of the lifestyle in North or South Carolina, actually, JT. So blah, blah, blah. Any intelligent questions out there? Somebody says we just eat bamboo and make bad trades. In the chat room, I like to call people morons if I think they're doing stupid stuff, and so we wanted to tone it down, so it's now panda. If you're a stupid trader, you're a panda, and so that's the inside joke. We're gonna have T-shirts made up for VOSI members that said bulls make money, bears make money, pandas get slaughtered, and have a picture of a panda that's been slaughtered, and I'm sure that'll get all the PC types in an uproar. Anyways. Let's see. So going back, let's see, Hawk. We like this Leju Holdings. Look at that. See, nice pocket pivot, comes right back in. Typical. Loco going lower. Looks like a little bit lower. Data was another one we were looking at. What were the other ones we were looking at? So, I think you still have to watch and see if these issue some sort of a failure sign. This could be the start of one. You get this wedging rally on workday. That might be a potentiality there. And Splunk also, same thing, up at the highs, So I'm watching the 620 here. I think the market comes down again. So I'm not looking to buy any stocks on this pullback just yet. So I think we're through the hour, so pretty much done. But let's see. Let's take a look. I did short some CMG while we were live on the call today. Here's what it looks like right now. You're starting to see. You just got the signal, so that just went off for me. So that's my short signal. You'll see this one a lot too. A breakdown right at the opening or before the opening, and then you get a buy signal, and then it rolls back and becomes shortable again. So. Twitter trying to bounce. I may have to go back and put that out. Let's take a look here. I'll just go through all the stuff I'm watching, but you can see it's turning here. So I'll re-short it, looking for I'm looking for some sort of a sell signal or an extension signal. Notice how you're getting a pretty good MACD stretch here, which could be telling you that it's shortable right here. But I got plenty of other stuff that I'm short, like Tesla, that's working. So I don't need to start getting too crazy here. Somebody says, will you be able to see if and when the market turns and becomes normal? I don't really worry about whether the market's normal or abnormal or anything. I just play it as it lies. I stopped trying to worry about that or try to make macro calls on the basis of a trend, because the trends are too choppy. And I've employed more things like the ugly duckling theory, buying things on weakness, not chasing strength, stuff like that. And that, to me, that's much more sound than, in this environment at least, in practice, than chasing strength. So, but in that case, it doesn't matter to me whether the market becomes normal or quote normal, as if it ever was. Some people argue that if you go back to the 70s, and Dr. Cage, feel free to chime in here, and we can close out today's discussion with this topic. Are the markets different than they were 30 years ago, 40 years ago, 50 years ago? Are they more different than they were back in the early 1900s? Maybe not. Some guys have told me, older guys have told me that they've seen, you'd have stocks flipping out in the past, and you get that sort of action today as well. So, I think the market is what the market is. And
yeah, you have markets that go and you have markets that have different personalities. The 70s post oil crisis market was pretty flat and go nowhere. With skyrocketing precious metals prices, it's a different flavor, different environment compared to the 80s and 90s, which had a lot of great uptrending patterns, and then you had the post-2000 dot-com bubble burst, and the market took on a whole different tone there. NASDAQ lost 74% of its value, and then you had the compressed rallies of 2004 to 2007. Which are, again, a totally different flavor than anything I'd seen or studied going back, 100 years of market history. So I guess the upshot here is that the market will always create a new personality, new flavors depending on the circumstance. So you've got to be ready for it, and you've got to be ready to employ the basic principles of sound investing. And, of course, we talk about that quite amply in our books and on the website and on these forums. So just always be prepared, basically, and just assume that the market lives to fool. So when you start getting complacent, then get worried, get concerned. The first quarter of March 2000 was a very concerning time because there was rampant complacency, and money was made too easily. And so you should have something internal check that says, wait, something's not right here, and continue to trade on full margin during such times, of course, but be ready to run for cover. And I remember, I think all of us who were very competitive and didn't share what we were doing, we were all still out of the market within just a few days off that March 2000 top. So yeah. Just always be on your feet.
Yeah, definitely. And so I think this market necessitates more activity in terms of taking profits when you have them, and using my axiom of the fool and his money are lucky enough to get together in the first place. So. Last question before we sign off. What is your favorite stock now? My favorite stock is shorting Tesla, and Facebook and Twitter, and LinkedIn is also another short here, and it's heading lower. So how's that? Here's my take. If the market goes higher, then you want to be in BABA. But you're not going to buy it here. It's extended. It's going to get a pullback, probably gets a sharp pullback. And you wait for that to happen and see where the market is at that time, and then maybe that's your opportunity. But I think that that this is a big stock, and it has potential to go a lot higher from here. And this is probably my favorite name in terms of what I would want to own if the market goes higher. Of course, from here you have to find a proper entry point. And I sold into this sharp jack, and it can do what it wants to do now, but it is going to have a pullback in here and set up somewhere. And that's where you want to come into the stock. So you just wait for that. But I do think this is your big stock. And IPO U-turn, I think it's a lot like Google back in 2004. And that's pretty much my take. Anyways, that's all we have, you guys. So thanks for showing up, as always. And we'll catch you next time.
So long, everyone.